This podcast is brought to you by Independent Building Advice. IBA acknowledges traditional owners of the land and waters this podcast is recorded on. If you find this episode helpful, follow us for more so we can continue putting out free value for all homeowners in Australia. It really goes a long way. Enjoy the episode.
All right, today we're talking about a really important subject, and this is you can buy a house, you can renovate, you can extend, you can have an amazing house in front of you. But the reality is that you actually have to pay for this, and you have to actually make sure that that you're actually having a good life, you're enjoying the new home, but you're also thriving, that you get to do all the great things, that you're not a slave to your mortgage. And so many people overextend themselves or have all this other debt and things like that they need to work through. And at the end of the day, they just can't afford their home, and although they got a beautiful home, they hate it, or worse, they can't finish it off, and they just become a slave to the mortgage. So what we really want to do here is we want to give you some help and advice and give you some feedback as to how do you handle that? How do you make your life amazing, that you can have a great home, great lifestyle, enjoy life, and also make a bit of money? And the best person we could possibly think of to get this across is Karen Adams, who, welcome aboard. Thank you for coming on today for the podcast.
Thank you. What a privilege.
Absolutely. Now, you've got a wealth of experience in finance. You've got a business that helps people, Financial Management 101, that helps individuals, helps small businesses, helps people actually manage their money, go from being like mountains of debt and way behind the eight ball to actually free and clear of that. Give us a bit about your background, and let's get into this today about how you do that, ideas for people, tips, all the above. Tell us a bit about yourself.
Awesome. Well, I calculated that I've actually been in financial services coming up 40 years the end of this year.
Wow.
That's a long time.
Yeah.
And I've seen a lot of things in that time. And, you know, back then, interest rates when I first started were 18%, 15 going 16, 17, 18%.
Was that 92? Ish?
No,
yeah,
87.
Okay. Oh, wow. Okay. Oh, wow.
You're making me feel old now, mate.
Sorry, yeah.
But yeah, so I saw a lot of that. But I mean, cash management rates were 18%, so they were fantastic. So if you had investments, bam, you were getting paid. But also, back then when you had a mortgage, what did you have? You're lucky if you had a car loan. You didn't have Afterpay, Zip Pay. You didn't have debt for renovations. You didn't have extra high mortgage debt. You basically structured your loan to suit what the pay was, which was one income earner back then.
Yeah.
And then mum had to then start to go out to work because things were becoming a little bit more expensive. But, you know, so that's how I started, and then progressed through to doing things like self-managed super funds, an ex-finance broker, ex-financial planner. And through that, I've actually seen a lot of people struggling who are earning really good income, but they didn't know the foundations or what was happening with their money, which is not their fault, right? Because we're not taught at school. No,
and that's a huge thing. You don't get taught. It should be mandatory.
Agree.
Yeah,
it should be.
I've never used trigonometry since leaving school, but I could have used how to manage my bank account. But no, that's huge, and that's awesome from that perspective that there is businesses out there that when you are. You know, when you can't sleep at night, you're waking up and you feel sick and the whole thing because you can't sort your finances, you can speak to someone like you.
Absolutely.
And go, well, let's look at that. And that broad background that you've got, I have no doubt that, and correct me if I'm wrong, that you actually can draw on all those pieces of information probably daily to solve their problem or understand their problem to then solve it.
I do. And one of the major problems is people have got far too much debt.
Yeah.
And it's bad debt, not good debt.
Yeah.
And that's the difference, right?
Walk us through that. What's bad debt, good debt?
I'm so glad you asked, because people don't know the difference between what good and bad debt is. They think debt's all bad. No. So bad debt is like your credit cards, your Zips, your Afterpays, your Latitudes, all those debt that you're paying money out and not getting a return or an asset on, right?
Yep.
Your car could be considered an asset depending on what your line of work is. And if you can, back in COVID a few years ago, you could flip your Land Cruiser and you could get double the amount of money. So that was considered sort of an asset. But really, cars are not an asset, but they can be depending on your business and nature. Your house is considered potentially an asset because when you sell it, if you've got equity, you can use that to buy another house. You can use that to buy an equity position in commercial buildings, in another property, or buy shares. So going into debt for something that you can get a return on investment is good debt.
So if it's going up or making money for you, then it's
absolutely
good. Yeah, bad's bad.
Bad,
so,
yep.
Yeah. Because I think it was Shaquille O'Neal or one of those I was listening to, and they said you shouldn't buy a car unless you can afford to buy it twice with cash or something like that. Like it was, I don't know, you hear all those different principles, but you're right. If you're buying something that's going to depreciate and it's not a work vehicle or something like that, well, you know, that's money you're throwing away, and that would well, that makes sense.
Well,
It's bad debt.
For the average Joe Blow, that is a bad debt because they don't have a business to write it off. They don't have the tax deduction. And they've basically just got an asset that they can't do anything with.
Yeah.
It's just taking them from A to B or going on holidays. But, you know, I mean, we love our cars. And so we want to actually go get that next car. But a lot of people finance the whole lot.
Yeah.
And they get caught in with this 1.99%. But there's catches, right?
But I think the trap there is that it's only this amount of payments every month. I can afford that. I know I've been guilty of it before with streaming shows where you go, maybe we do need Netflix, or maybe we do need Stan, maybe we do need Binge. Even Riley behind there was nodding as I was saying that. But the thing is, though, that you've got these ones, you go, it's only $10, $12 a week. But you're not, I don't think the individual looks at it and goes, it's $12 plus 20, 15, 5, 10. You go, it's only that. And then you do it with car loans, home loans, the whole thing. And then all of a sudden, adds up. You go, where's all my money going? Do you experience that a lot?
I experience that a lot, and I've seen so much debt that I don't even know how sometimes the bank will lend them the money. And most times they won't, but sometimes they get to slip through and they get it. But it's just stressful.
Yeah.
I mean, what happens if you lose your job? Or what happens if you have to take a pay cut because there's some management changes or whatever? I mean, you've got all that debt, and how are you going to pay for it?
Yeah.
Get a second job, go to a side hustle.
Yeah, or get another Visa card to pay for the first Visa card,
Which was what people do, right?
Yeah, it's crazy. So, because, I mean, from a bank's perspective, obviously they tend to, with Visa cards, they tend to risk a lot more and they don't really check all your income as much as they might stringently do with a home loan. From my experience, I could be wrong. What's their angle with that? Are they sort of, look, it's worth the money because the interest is there. Are they playing a game of most people will pay it back? Is that how they sort of work it? Or
well, the banks, when it comes to credit cards, are going, right, we're going to bank on Joe Blow not paying his credit card, so we're going to pick up all the extra interest off that.
Roger.
And then you've got that loan, which on average, people don't sweep off every month. If you did, you wouldn't be paying bank fees. Yeah. And then if you miss your payment, there's $30? Yep. And so the bank goes, great, here comes come in sucker.
Yeah.
They don't know how to manage their credit cards, and now I'm going to pick up $60 because one, they're going to forget to pay. Then we're going to do, there's another cost if you don't meet it in time. They'll slog your fee.
Yeah. So, it's death by fees.
It is pretty much. Yeah. And it's in the bank's advantage, right?
Oh, absolutely. I mean, they're playing the long game.
They are.
The short game. Because I've said it, I don't know if I've said it on these podcasts, but I think a lot of people have perfect intentions, right?
Sure.
And I do say it a lot with builders. Like, we're definitely going to do a great job and build your home, blah, blah, blah. But I think people go, I'm definitely going to pay stuff. Do you know what? I know that trick about if you pay it off before the end of the month, you're not going to pay any interest, whichever. They have perfect intentions and then don't again. And then all of a sudden the banks win and you pay all those fees and fines. You've got to sort of be very, very disciplined.
But I have a theory on that.
Yep, hit me. Yep.
And it's not really theory because I've actually tested and seen it happen, is that people go, I'll pay that off every month. Yep, no problems. But they don't put it on auto pay. So if they did, they'd sweep it off every month. And you're essentially getting free credit without having to use your own cash to pull out, which could be used to sit on top of your mortgage to help reduce your interest. So that may sound confusing, but essentially, if you do not pay your credit card off and sweep it off every month, so you built up $2,000 and you've got a $5,000 limit, and so you've sort of paid all your bills, paid all that, that's fine. But if you don't sweep it off, you now charge interest on that. And most people go, I'll take the cash and I'll pay it, but the money could be better sitting on your mortgage in the meantime and use that money then to pay off your credit card. So
can you walk us through that in a bit more detail?
Yeah.
So say someone's listening, because I have a funny feeling that people who are listening, some of them may be in debt. So in that scenario, what would be your strategy for making that work?
Okay,
in a bit more detail, a bit slower with how that would make that work.
Yeah, and that's great. I'm glad you asked, because you know what? People think that credit's just great, and they forget when they do the tap and go that there's this endless pit of money, but you've got to pay it back.
Yeah.
Right, and we get caught out because we go, I've just bought the next shiny object. You know, the tech or the tech. I always got TV in my head because people go out and buy new TVs or buy something for their kids, right?
Yeah.
And I get that, but then they forget there's a credit card bill due in 30 days, 45 days, whatever is the credit card that you've got.
Yeah.
And that's not free money.
Yeah.
People think it's free money. It's not. You got to pay that back.
Well, it's like the chips at the casino. They don't give you cash. They give you chips. You go, it's not real money. I'll just bet this. No, that's $500 sitting there.
That's your money.
It's the same thing, I think, as that same logic as the...
Yeah, absolutely.
Yeah.
So the trick is, if you're not disciplined, Firstly, don't have a credit card.
Yep.
That's always what I say to people. And I do see a lot of people with I'm talking a lot of money, like $50,000, $70,000 worth of debt on credit.
Wow.
Not personal loans, because that's on top of what they've got as well, plus Afterpay Zip. So the strategy I say to people is let's start and smash the credit card down. Start with what you're comfortable with, right? Because there's different ways to do it. Some people go, well, I'll pay the small stuff first, and they call that the snowball because you start small and you build up.
I've heard that many times.
Yeah, that's a real common thing about how to reduce your debt. So you start with the smallest debt because you know what? You've got a bit of a win. You pay your Afterpay at $500. Yay, you know, it's $500 off your $50,000, right?
Yeah.
And then you go, well, I've got a $5,000 credit card and it's right maxed out and I'm getting interest on that and I'm missing like payment fees and, you know, that thing's just killing me. So you go, right, because then I've got a $15,000 one, then I've got a car loan. So you go, right, I'll do the $5,000 because I'm comfortable, I can smash that. Now you've paid $5,500 off, right? So you're starting to feel good about yourself because you know I can do this because you're getting a habit. The other method is, which is because I'm a bit disciplined, if that was me, I'd go, right, let's start with the big debt first, right?
Yeah.
Let's start with the biggest.
Well, you're not talking home loan. You're talking
no, home loan's always the last because you know what, that one's going to take a few years to do that,
gotcha.
and you've got to clear the bad debt off first, so you can use
your
that.
big Visa card versus your smaller Visa card.
Yeah, your big stuff or your personal loans, right, that are costing you because they're higher interest.
Yeah.
Or your credit card's sitting at 20%, but some high interest personal loans now are higher because you haven't paid them off at a certain time.
Yep.
So now they're slogging you. So you start with whatever you're comfortable with. The first thing is start with a plan and go, right, we want to smash off $5,000 off our debt.
Yep.
Pick a debt and start working on it a little bit at a time. And the best way to do it is start, if you're not disciplined, put it on autopilot. So at every payday, and I say to people, $10, $20, $50, it all adds up to smashing the debt down. You think, oh, it's only $50, it's only $10. But that's $10 off probably the interest that you're going to be charged on the total amount.
Yeah.
So that's if you're not good at managing credit. I say first, don't get a credit card. And if you do, stop using credit, start using a Visa debit, which is your money.
Yeah.
Because you can see exactly what you're spending then.
Because Visa debt's it's basically like a credit card, but it's only your cash that's in there. You can't
Correct. You can use it like a credit card, but it's your money.
Yeah, gotcha.
And that way, that's the easiest way. And I put people on that initially until they get the habit forming, right?
Yeah.
And then when we smash down, we've got all the debts down. One lady took 12 months to pay off $50,000. I was really impressed. She just,
really?
Yeah, that was a big chunk.
Yeah.
And she had a job and she had rent and she just kept putting little bits. Whenever she got a tax refund or extra cash or birthday money, she just kept putting it off on her credit. And then what we do is we kind of need a credit card sometimes because if you go overseas, Visa debit's really quite challenging unless you use some of these different ways.
You get the insurance that goes with it, I think, as well.
Yeah. I mean, Amex is good for that because while that's a tricky little one, you do get insurance, travel insurance with it. So
and points. Yeah.
And points, exactly. So you've got to work out how to manage it better for you. Yeah. But essentially, you would then... I was just thinking so many things about credit.
Absolutely.
Sorry, my mind.
But you got discipline playing off the Visa card and credit card, and that's getting down. But you said,
but then I want you to do
small,
So you want to keep at least a $1,000 or $2,000 credit card.
Yeah.
So this is what I did with this lady because she needed that credit card for just in case when she travels.
Yeah.
And I said, well, do that, but get rid of all the other ones and keep. If you can't control 2,000, drop it to 1,000.
Yeah.
Because you can only spend what you've got then.
Yeah, absolutely. And it's nice that it's important to have that as a safety if you do need emergency or something like that.
And some providers won't allow a Visa debit for a payment. Yeah. Not many today, but a lot will allow it. But some will want a credit card because they know the bank's going to guarantee it.
Gotcha, absolutely.
Yeah.
So let's say you had a $5,000 debt with a lower interest rate and a bigger debt, say $15,000 or $20,000 with a higher interest rate. You're saying you should potentially hit the higher percentage one first,
well, that has the greatest impact on your cash flow.
Yep.
So that's where most people can't do what they call the avalanche. You start with the big one with the highest rate of interest because that's having the biggest cash hit. So people start small and a lot of the snowball one is the little ones working up to the big one. That's really common.
Yeah, and it makes sense.
Yeah.
But I have seen so many people, and I'm not in your area, but I obviously building houses, people need to get finance, where they pay off the $5,000 one and they treat it like they've got $5,000 in their account. And then they go, great. And they just buy something else. And you're going,
I know.
Whoa, it's not your money. And it's actually more expensive than it being your money. And then they go off and buy something. And it's like, no, you've got to be disciplined and make sure you pay it off.
That's okay, but I bet they don't pay it off. They sweep it off every month, do they?
No, and they go, we've paid off, let's spend it. And it's like, no, the goal here was to get in front and be well and truly in front. Yeah. So with that, if people pay it off, what are things they could do, like if they're not disciplined, what are things they could do to basically give themselves like a plan or a goal or something to give themselves alignment so they do follow through with these goals they want to do?
Yeah, so first thing is you've actually got to put it out. You've got to put it in writing, right? And so I have like a debt repayment strategy that says this is all your debt. So when you start writing it down, you see it, you go, holy moly. And this is what this lady said. I didn't even realise I had that one. And so I said, yeah, and there's $200 a month of your income going to pay that. Yeah. Imagine what that $200 a month would go towards your investment, your super fund, paying off your mortgage, or renovating the house, you know, because some people want to renovate their house because they love the area, but they don't have the cash flow to do it.
And if you do that, just give us a call. No,
Always give you a call.
No, you're right though. So know the problem first.
Know the problem, write it down. As soon as you write it down, you visually see it, that's when you go, this is when the sweats break out, okay? I'm not lying. Most people go into, and they put their head in the sand and they go into panic mode. And that's where I actually come in and going, I've got you. It's okay. I'm going to work with you to smash this down. And what I do is we put a plan in, we work out what strategy works for them because everyone's mindset's different, right, how they work. And then I help them by putting in some automations in place, by making sure that at payday we get $50 or $100 extra on top of what their minimum repayments are to smash the first debt down.
So, okay, that's great. Time to talk about this. So what do you do? Like, what does your business do for people like this? So you're a coach. How does that sort of work?
Yeah. So essentially, I'm really making them accountable. So that's what a coach does. Think of a footy team. What are you doing? You're kicking their butt. You're making sure that they line up their goals where they need to be, or if their mindset is sort of dropped because something's going on behind the scenes, the footy coach goes in. I know footy really well. So, you know, they kick you up the bum, they give them a motivational talk, and they just keep them on track. And so what I do, I keep them financially on track.
Yeah. And look, I'm just saying, like going to the gym, doing anything that requires discipline. Like I said, I think everyone has perfect intentions. If you're someone that doesn't follow through, if you're in that much debt and you haven't done it before, that investment in someone like you is just, it's worth its weight in gold. It's worth 20 times it because you're actually going to know you haven't done that. And that guilt trip, not that you make them guilt trip, or you might do, I don't know. But,
I don't.
But the fact that, oh no, Karen's going to call us and ask us again, we better do it. It's that I've got to do that. I mean, I went to the gym with a couple of other guys and I would happily sleep in any day of the week. Yeah. But I wouldn't want to let them down because we're going together and they'd give me a hard time. So I went. And I think having someone looking out for you, especially in that is actually going to get you so far in front if you actually follow through with it. If you haven't got a track record of it, then get someone like you in there to go, hey, here's a plan. This is how we make it work.
And the conversations are never pretty to start off with because there's a lot of guilt and shame around the way we manage our money, and there should never be, right? Yeah. Because unless you have been taught and you know money inside and out, then you've still got some stuff going on with your mindset. Yeah. And mindset's a huge part. I have to say, when I first started, I thought, 80% know-how and 20% mindset. Wow. I mean, I had a slap in the face myself because I went, that's just so wrong. Yeah. I was about to swear then, sorry. Yeah, it's just bullshit, really. It's because it is, it's money is your story, right? So what's your money story? Have you been taught by parents, grandparents? Who are your role models? Yeah. Like, it's just like anything. We follow, as we keep growing up, we follow our parents, right? Yeah. So that comes to money as well.
Yeah. Well, that's probably the biggest educator for you if you're not teaching it in schools. And I know they're doing more now, but
parents don't even know themselves. But
like you said, in the 80s, it's a very different world to what it is today. Yeah. And you haven't been taught this, so it's like parenting. Like, where do you learn that? Well, you learn that. How your parents taught you. I think that coaching, and I'm not just saying because you're here, but I think that coaching is important. If you really want to get ahead and you haven't got that track record, it's going to help you do it. So so they have this. So you're saying for the disciplines they have is they write it down first of all. Yep. And then what's the next step?
Then we put a plan in. So they tell me which strategy was going to work, whether it's snowball, paying the smallest to the largest, or whether it's the avalanche, taking the biggest one and then working down. Yeah. I'm going to tell you 95% always take the snowball because it's easier. Then what we do is we've got set the plan and then I help them put that in automation. Yeah. So I say, all right, what can we, and I look at their budget. And budget's such a dirty word for a lot of people, but it's not. It's a spending plan. Yeah. You got to make it fun because this is how you go, okay, where can I tweak? Where can I add more money? Where can I go on a holiday? But for these people, it's about where can I pull the extra money to actually pay these debts down. And so that plan now goes, right, now I've got an extra $20 a week that I can squeeze because I'm going to cut 2 subscriptions. I've got 5. I really don't want 5, and I've got a trick on that as well, right? Yeah. I don't know if I can share that now. But please. The quick thing is with the subscription is if you love your streaming services, which we all do, this is what I tell clients. Go in for that month, binge watch if it's whatever it is, the series that you want to watch. Yeah. Then as soon as you're in there and you already started watching it for the first couple of days or a week, make sure you cancel it. So you've got a month's worth to watch. because you're only going to binge watch subscriptions of series, right?
Yeah.
It's not going to be one-offs like whatever. Netflix for us isn't ongoing all the time in Disney because we constantly watch movies.
Yeah.
But when it comes to Stan and others like that, I turn them off and I put them back on if there's a series that I want to watch.
Yeah.
And then I'm not paying and I'm forgetting about it, right?
I think that's a great strategy about cancelling them straight away because you've got that month.
Correct.
And then all of a sudden it just doesn't work anymore and then you can review it.
I often do that with a lot of things because I go, all right, I'm going to test it, see if I like it. If I use it.
Yeah.
And like Disney, we stopped that for 6 months. And all of a sudden my daughter's into Star Wars.
Yes.
So now she's binge watching all the Star Wars and all the trilogies.
Yeah.
And of course I'm sitting there watching with her going, oh yeah, she's into it, which is great. And she's got her girlfriends coming over in a week. And so they're having a sleepover and they're binge watching some of the Star Wars. So you know what? That's on.
Yeah.
But when she's finished watching that, I'll turn it off.
Yeah, great.
But it'll probably be in a couple of months. She'll let her gut full of it and I'll turn it off. But meanwhile, Netflix is constantly on for us because there's a lot of things for Netflix. But the others, I think Paramount, I turn off. Apple, I turn on and off depending on what I want to watch.
Yeah.
But so then you've got some free cash, right? Because now we've just freed up $20 a month.
Yeah.
That extra $20 goes straight on to that debt that you've decided to pay.
Yeah.
And then you just keep working every extra dollar, any extra birthday money, because they've made a commitment now and they're going to forego their birthday money, right?
Yeah.
That you get. Because most people today get birthday money. Well, in our family, parents and
Yeah.
us don't know what to get anyone anymore, so we just give us money.
Yeah.
And if that's in your family, then you use that to pay the debt off.
Yeah.
So now we do that. Now we've paid the first one off, the small one, say the $500 afterpay. If you don't need the afterpay, which I tell them you don't anymore, we make sure we close it, cut it off, right?
Yeah.
We want to eliminate
You can't go back to that.
No,
Yeah.
you cannot.
Yeah,
We're eventually going to give them something, but we don't want to have everything still open.
Yeah,
so we cut it up. If it's a credit card or afterpay, we close it off. You get your letter, and then we have a celebration, right?
Yeah, I was waiting for you to say that because I thought you got to celebrate the
Always.
wins. Because I'm guilty of anything. Like I'll do something, and move on to the next thing. And it's like, whoa, we just did something awesome. If you don't celebrate it, it's
well, then you've actually missed the achievement of what it is. It's like the journey getting there, and then the celebration of I've achieved it, right?
Yeah. Celebrate without spending money, right?
Well, no, you can, but I say to people, maybe you've foregoed your coffees, and people do this because what is it? It's about $6-7. I haven't bought coffee for a while. Well, it's ridiculous, right? Yeah. And so some people go, all right, well, I'm only going to buy one a week.
Yeah.
And so now they go, well, I actually stopped buying the cronuts or whatever, the muffin that went with it. Yeah. So I said, this time, go and buy that and buy your friend a coffee if you want to, because what's that? $20, if that, and you just paid off $500. It may seem like, but you got to have the rewards as well, so you don't feel like you're depriving yourself.
Yeah, no, I think that's great. I think if you have, and I think, correct me if I'm wrong, if you actually say that, what the reward is going to be at the start.
Absolutely.
So that you know what you're going to do, it's clear.
Keep your eye on the prize.
Yeah, absolutely. And I'll tell you, you're going to do this anyway, but I think a really important part of that is if you've got a partner, boyfriend, girlfriend, whatever, husband, wife, you've got to get them on board as well.
Absolutely.
Because I think if you're not aligned,
it's really hard.
Yeah, and any work you do, if they're spending it on the other side, it's not great.
Yeah, and if they're not on board, it makes the journey a lot harder.
Yeah, and some people are just like delusional as to, oh no, we're fine to keep spending it. And I think in some relationships, they have separate accounts or they don't know what the other person's doing.
That's quite often happens.
Yeah, wow, yeah, absolutely.
Or they get a credit card so their partner doesn't know, so they can go buy on Temu or on Shein or Amazon, whatever they want, and they hide the parcels and bring them out later.
Is there, do you like with a credit check and that, is that how you can see what debts they've got, or not your partner? I'm not saying how to spy on your partner, but I'm just saying
them individually.
If people forget about their debts, do you use that from the statement, or how do they find
so
it?
we basically go through. So I always get people to do a budget, right, first. Yeah. And that's when and every month I make them check it. Once they've got it down, it covers everything, every household, every expense you've got, school fees, whatever. Everything you spend, whether it's donations, gifts, pet food, pet insurance, whatever it is, it's all written down, because that's how we can work out whether we can tweak. And more times than not, I actually get them to go and shop around for their insurance, and they can save a couple of $100.
Yeah.
It's all extra money, right?
Yeah. Well, it adds up. And the old saying, cents look after the dollars, I think.
Yeah. And the trick
so
though
easy to
is
forget about that,
when you do the budget spreadsheet though, and mine is very visual because I'm a visual person as well. I hate seeing numbers written down and words because it's like, what does that really mean?
Yeah.
Attached to it on the right is a visual perspective on where their biggest spending is in each category.
In a graph, you mean?
Yeah, in a graph, sorry. There's the spreadsheet attached to what I use.
Yeah.
It instantly pre-populates exactly where the biggest spending is. So as I keep adding it in, it shows which is whether it's debt, insurance, groceries, other household stuff. It can tell them where their biggest spending hits
And you
are.
put this together for your clients, do you?
Yeah.
Yeah, perfect. Yeah.
Yep.
That's the thing, though. I think I use the analogy a lot in building that, but I think a lot of people with way behind the eight ball, or even just slightly behind the eight ball, they look at it, it's like they're at base camp of Mount Everest and they're looking up going, oh, where do I start? You know what, let's put it off for next week. And the reality is that your new future of being like free to the chains of debt, the sooner you start, the sooner it's better for you. And what I think you said was gold then was that even 20 cents or $1 or so, you're on the right track. You've started that process. Journey 1,000 miles starts the first step. That every little bit counts and it accumulates over that time that you're just getting in front, which I think is important because I think a lot of people go, oh, it's too hard, we'll put it off to tomorrow, and they just never start.
They don't. And do you know what? Retirement comes up very quickly.
Yeah, yeah.
Think back in your 30s, you thought, oh my God, 60,
I'm
65.
still in my 30s.
Yeah, I wish.
Yeah.
For me, that is.
I wish. Yeah,
I don't know, you can't speak for yourself, but
no.
and I just think our 30s, you know, earning all this good income, you know, put a bit in super, had a good time spent, bought properties and stuff.
Yep.
And then your 40s, you have family and you've got school fees and you go, whoa, what's going on? And
how old am I?
I've got to try and start working out what's going on here. And then the panic attack comes because you go, I'm in my 50s now.
Yeah.
But for people I work with, they're in the 50s, they go, I want to retire, but I can't afford to retire. And living off Social Security and age pension is horrific.
Yes.
No one can really do it and enjoy their life.
Oh, absolutely.
So you've got to get your money organised now so that you can start planning and retire comfortably.
Absolutely. I think that's gold. And I think knowing what you need to survive then.
Absolutely.
And then reverse engineering is a great way to go.
Yep.
What are your thoughts on, because you hear it a lot with people who go, oh, I've got this Visa card or credit card, I'll just roll that into my mortgage, I've got a fair bit of equity.
Well, I've got two schools of thought on that. Okay. So firstly, if
Do you have one school of thought on anything? I was just, no, I'm joking. No, I was kidding.
No, you're cool. I've got lots of schools of thought. Well, okay. So here's one of them is if you've got massive amounts of debt, right, and you're sitting at 60, 70,000 and this person, there's no way in hell they're going to actually pay that off. And they've got some equity. As much as I'm loath to do it because you're adding it onto your mortgage, sometimes the easiest way for that person is to have one debt, and that's their mortgage. And it's generally at the moment, it's a lower interest rate than their 17% or 18% personal loan, then their credit card debt of 22%, which is generally about 2 or 3 people cards they've got. Car loan. As well, I hate doing that. At least that frees that now up so they've got one debt and they can do it.
Yeah.
And if they can afford to manage the mortgage repayment again from start, then that's great. So
I guess also if they're crippled with income, like the mortgage, the Visa card is so high.
and all the personal loans that go with it,
Yeah, so that if they can free up some cash flow, but they've got to be disciplined to pay it off.
They do. But if they're not, then rolling it in and refinancing your mortgage just so you can get a lower rate and one consolidated debt may be the plan for them. The other thing is if someone is got a habit, which I've seen this, and they roll it in, they use the equity, they're actually falling further behind because they're not smashing the debt down. That 25-year loan's now going to 27 because they just keep extending because they need to extend the loan term out so they can afford the repayments. And they just keep cycling. Well, they're not actually achieving their goal then.
And the cost on that interest is going to be phenomenal.
Absolutely. And every time you refinance, it's costs. It's not done for nothing.
No, the banks.
Yeah, exactly.
The banks have worked it out. Yeah, absolutely. But I think with that, I think it's dangerous personally if people roll it into their mortgage. If you're in a lot of debt, now I'm talking about student debt because you had to get there to get where you need to be. But I'm talking if you've got lots of Visa cards and credit cards and you've got a track record of all that debt, I think you have to say to yourself, maybe I'm not disciplined. Maybe I'm not disciplined.
Maybe I'm not.
And you may not want to admit to it. You may argue and people might write in abusing us saying, I am disciplined, that's great. But just assume you're not. If you're not, speak to someone like yourself and say, okay, what is the best way to do this? And assume you're not disciplined. Even if you are disciplined, just assume you're not disciplined and put strategies in place to actually pay that off. I think if you can do this, rather than put a Band-Aid to then think, oh, when I do that, then I'm going to be a better person, disciplined.
Well, then they end up getting another card. I've seen that before. Or they get another personal loan or they get a car loan.
That's my point,
Which drives me insane because I'm thinking you did that because that was the last resort. But you don't have the habits or the mental capacity to actually stick to that and save up for the car and maybe don't go and buy the bloody $50,000 car. Just buy something your budget can afford until you've got everything under control and then step up.
And that's my point, though, because you free that up, then sure enough, 2 years later, you got the same debt again, and then you've rolled it in. So I would say you're better off going snowball effect if you can do that and do that or one of the other strategies. Do it that way rather than putting a Band-Aid on it. And that way, at the end, you've learned the discipline and the strategy to actually handle yourself properly, and you're most likely going to, in the long term, have a great outcome.
Well, that is the ideal, but not one size fits all. And some people do need to do that to actually free their mental health up so they can start to go, right now we've got a plan as a family, we've got the mortgage and that's it, and we promise we're not going to do this.
Yeah.
Because if they work with me, I'm going to slap them and they won't be doing it.
And you need it. Yeah.
I had someone go, I actually have a couple of clients now go, actually I want to get some fencing done in my house. Can I use equity? I said, do you really need to update your fencing right now? So I'm like their checkpoint. I feel really mean sometimes, but I'm doing it for their own benefit, right?
Yeah.
And this lady goes, I really want to get air conditioning. I've been hanging out for it. I said, what have you been doing up to now? She goes, I've just been surviving, I've just been borrowing. I said, okay. And so now you're going to put $5,000 on a debt when you haven't really got your mortgage under control yet. Do you really want to do that? She goes, yeah, you're right, Karen. No, I don't. I'll just suck it up. Yeah, suck it up for a while. Save the $5,000 or find something that can help you while you do it, because she's already got a facility that she's borrowing anyway, one of those portable ones. So that's temporary for a moment.
Yeah.
And I said, just save the extra money up to do it.
Yeah. Well, that's the thing though, is like it's different horses, different courses, like you said. Like you if you're different, make it work, but you need someone questioning you.
Yeah.
I use the analogy, it's like if you're a parent and the child wants another piece of chocolate, the kid thinks it's in their best interest to get another piece of chocolate, but sometimes the parent goes, no, you don't. I know better. I'm telling you what to do. And someone just questioning you on something like, do you need the new fence? And they go, well, no, not
When
really.
the fence is already working.
Yeah.
You just wanted to make it look pretty because you want to make it look like the rest of the neighbours.
Yeah, well, someone made a comment at a party once.
Yeah, exactly.
I've got to fix that fence. But you're right. But someone just asking that same question, do you really need it? It's like, well, actually, not really. It's like, glad I could help. See ya. It's sort of giving you that bounce back, Oh,
I had this lady who wanted to buy a dog and she wanted to put it on credit. I said, absolutely not. Why are you working with me? No way are you doing that, because that is a luxury item. If you can't afford the dog, you can't afford what it costs to keep the dog with food, and maybe you do insurance. So no, you're not putting a dog on credit.
It's an ongoing cost.
It's not an asset. I'm sorry, you're not going to flip the dog, or you're not going to breed the
well, maybe you are.
Or they're not going to breed the dog. They're basically just having the dog for luxury. And I get that. But you know what? You need to look at your standards for a bit and work out what's really important. Having less stress by no debt, and having a $5,000. This dog was like $5,000 or something. Yeah. I know Frenchies are up to 5 to 10, but
especially
I can't.
COVID, it was really expensive.
And I can't comprehend that. But
I mean, I'm all for getting a dog in that, but you're right. But it's also like food, vet.
Don't go into debt for a dog.
Yeah, how do you cater for vet fees? Like, there's all these things.
Oh, pet insurance is like, I know, because we've got it for our dog.
Well, we'll weighing that up, whether you put the money aside or do you.
Well, people don't put it aside.
That's the problem. And that's what the insurance companies have worked it out.
Well, we've got our money.
Yeah.
Very much so from the 2 dogs that we've insured. Yeah. And I know people that haven't, then have cost them thousands and thousands of dollars. So we've sort of got our money.
On the fear, what could go wrong.
I'm going to flip it when our dog gets to a certain age, because as it gets older, like life insurance, it costs you more. So probably the end of this year, we're then going to change it and put that money in a different account. Yeah,
you review what you got to do.
Yeah, and we just work out what it is, because you know what, we're getting freer with school fees. So
yeah, it certainly helps.
It certainly does.
Go through that right now. So people have a plan, obviously, they're going to do, and they celebrate the wins as they go. And obviously, they've got to basically make sure they're winning and be aligned with what they're trying to do with their debts and so forth. And and different strategies for different people, because like you said, you can consolidate if you wanted to, but
absolutely,
you've got to make sure you hit that on the head. With loans that people have, with Visa cards and credit cards and that stuff, when you pay it off, does the loan repayment reduce as you go? Because I think with the mortgage, it stays the same throughout the entire mortgage, doesn't it? The repayments.
Unless you put more onto it, and then you tell the bank, then it can actually reduce the payments itself.
Yeah.
So your monthly repayment, as you start smashing it down, will become less. So your minimum monthly does become less. Yeah. Because they're basing the interest on the total amount. Yeah,
absolutely. Whereas with a mortgage, it will stay the same throughout the whole.
It can, but you have to notify the bank with a mortgage too. You can actually get it lower.
Yes, and that's what
But people don't say it, and in some ways, I won't really want people to say it, because they've got more money that's been paid off in their mortgage.
Yes, but if they're disciplined by automating it, and they'll reduce what's owed, then they can pay it off quicker.
Yeah,
because even just a little bit more can really just take years.
Absolutely.
Off your mortgage. But I think people think, it's a cost and can't do much about it.
Even using the facilities that are around, if you've got a mortgage, you can have an offset or a redraw. Most of them got a redraw.
Walk us what they are. So
now offset can be quite complicated for people to understand, but essentially think of it like if for those that are listening visually, just think you got your mortgage amount of, say, $500,000, and then you have all your income going in for whether it's, your discretionary income going in, especially for, I'm just thinking PAYG people, right,
Yep.
who don't have work for themselves. It's a little bit different. But if you are working for the man, and then you basically put that money going in, so over a period of time, a month, the $10,000 goes in, but it comes in and out. An offset works that money is sitting on top. If you can visually see, there's a loan of $500 and there's like a $10,000 sitting on the top. The bank goes, oh, okay, now we only pay $490,000 on interest. However, interest is calculated daily. So you're not going to have $10,000 sitting there for the whole month. If you did, fabulous.
Yeah.
Then you'll have less interest that the bank would charge on top of the capital portion.
Yeah.
That's how your home loan repayments are worked out, right?
Yeah.
So interest is calculated daily. That's the key. So the more money that stays in and out, the bank goes, okay, now there's $499,000 because you've got $1,000 sitting in your offset.
And they charge you interest.
And they charge you $499,000.
Yeah.
So that can actually help reduce your mortgage.
So the way I described it was slightly different. So I go, if you've got $500,000 and you had $50,000 sitting in your account, the banks want your money. They want your cash. They can sell it to somebody else to rent out. So if you had $500,000 debt at $50,000 sitting there of your own money, they'll calculate that at $450 because they can use that $50,000. But then if you take that money out, they're going to...
They can't use the $50,000.
No.
They're actually disadvantaged because they hate using offsets because they can't charge you interest on the full loan amount.
Oh, there you go. Well, my point with my explanation was to explain to somebody at a very basic level who has never heard it before.
Yeah.
Otherwise, like you said, it's bloody complicated to explain it. And you know a lot more about it than I do. But I explain to people on a very high level. So they go, okay, I see what you're trying to do. And it's just basically making your life easier. But to me, I think it's a great way to go.
And it's transactional. Offset's transactional.
Yeah.
So it's a separate account that sits on top.
Yeah.
A redraw sits in the loan. It's harder because you've actually got to pull it out and put it in an account.
Yeah.
Where the offset is like a bank account already. So you can take it in and out all the time. That's the only difference.
Which I think
it does the same thing.
It's a great thing to have if you work, but a lot of people don't know about it. It amazes me how many people are not aware of what an offset account is.
No, and it costs you for a package fee for a lot of lenders anyway to have that offset facility. However, a lot of them have it and they're paying and they're not using it. So it costs them $395 a year and not using it.
Yeah, well, I think our accountant said to us a while ago that with being a small business that you could use the equity, you use your money you got aside for tax, you put that into your offset account.
You could, but most people aren't disciplined.
Yeah,
that's a strategy.
Discipline keeps coming back here. Yeah.
That's a strategy I love people to do. Like, imagine your BAS and tax, right?
Yeah.
So BAS is completely separate, and people think it's their money. It's not their money.
Yeah.
Just think of it. You get $1,100 in, 100 of it goes to for BAS, HF. Forget that you've got that, and then you got 1,000. Then you pay your tax on that 1,000. So essentially two amounts go on what side.
Yeah.
So say for example we have I don't know, what do you say, $100, say $200 between tax and BAS. If you were smart and disciplined and both parties, because remember both people can access the offset in a partnership or a relationship, you could actually have that money sitting there. And if you're a decent sized business, there's like a bit of coin sitting there, $20,000, $30,000, $40,000. And if you do it quarterly, you're reducing your interest portion on your mortgage. But most people aren't disciplined. But most people actually pull, I'll need it now, or I'll go buy this or do that. And they forget. And meanwhile, they've just diluted their tax and GST money that put aside.
And I think, we keep saying, discipline's the key. I think if you're going to do any of these strategies that you're hearing today, and just a little disclaimer here, we don't know you. These are just broad disclaimers. You've got to seek proper advice from this, from someone like Karen, or make sure you're speaking proper advice. Don't just listen to the podcast and just do something, it didn't work.
Absolutely.
Because it's done by individuals. But don't attempt any of these strategies, in my opinion, unless you've got the discipline to follow it up. And if you're not sure if you do, get the help and make sure you're doing it properly, because I think you can get into a lot of danger by doing these things, and then you spend all this money that was your tax money, and then all of a sudden, if you're a small business, you got no tax money to put there, and that will end you very quickly. And the tax department take this very seriously.
And they will charge you interest, and it's hard. Actually, with tax bills, it's not pretty.
Yeah, and then you're so far behind the eight balls.
Well, then you're an underpayment plan, right?
Yeah, and you got the government against you.
Yeah, exactly.
Because you weren't disciplined. So I think it's I think you need to make sure that if you're going to do it with support and help.
And everyone's circumstances are different because we all lead different lives. We have different incomes, different financial positions. So I always say to people, even when I'm coaching them, you need to check with your accountant to make sure this strategy works for you, especially for self-employed, because the accountant knows the best. When it comes to some other things like, I understand mortgages, I always say go back to your mortgage broker and make sure this strategy is working for you. If not, put this in place and just check that it suits you and your lifestyle as well.
Yeah, magic. I think that's important because
Yeah.
it's not doesn't suit your lifestyle. And don't lie. Don't con yourself on your budgets of what money is going out. Go, we'll just leave that one off there because I buy alcohol, whatever. I'll just leave that off because it's fine.
Well, you need to
be
live.
real with yourself. Be real with yourself.
Yeah.
It's going to come back to haunt you.
You've got to have fun money too, you know.
Absolutely. Well, fun money helps. Just one really important thing there is, let's say people are in front. Let's say they're caught up. What about budgeting? Like you got your money coming in, you've reduced most of your bad debt.
Fantastic.
You've got good debt there. What strategies do people do to get in front and make sure that they don't fall behind the eight ball and save money and have their own money in their account?
Okay. Have they smashed their mortgage off at this stage?
No, let's say they've got a mortgage. Let's say they've got a healthy mortgage. They paid off their bad debt. They've got a mortgage sitting there.
All right, so you've got some extra funds.
Yep.
Depending on the person and the age as well and what their goals are,
Yep.
I always like to put extra on the mortgage. Let's smash that biggest headache away.
Yep.
It frees up equity.
Yep.
Some people then want to invest. So our investment goals are very different, right?
Yep.
Some of us are more risk takers, some of us are not.
Yep.
Some of us love property, some of us don't.
Yep.
Some of us love super, some don't. Everyone should love super because when you retire, it's fantastic.
Super's
your
your
money's
friend.
paying you, yeah. So I like to say if you've got rid of all the bad debt, start putting more onto your mortgage. While you're doing that, if you haven't got a savings fund set up, you need to set a buffer.
Yep.
And by the way, while you're doing that, if we can squeeze a little extra out, I always like to start putting a savings plan in place.
Magic. Yeah.
Because the last thing you want to do is fall back on that credit because you didn't have a savings in an emergency fund, right?
Yeah.
And the rule of thumb is you need 3 to 6 months worth of what your monthly living expenses are.
Yep.
And that seems like a lot. So if it costs you $5,000 a month to run your whole household,
Yeah.
then you need to make sure you've got 3 months of that, 15,000
Yeah.
sitting in an account, because if something happens, you lose your job, you get sick, and you don't have insurance for health insurance, income protection or some trauma insurance,
Yeah.
whatever it is, something could happen, or your car breaks down, or some appliance like your air conditioning, whatever it is, you need to fall back on the money. And what most people do is, because they don't have that emergency fund, they go and buy credit again.
Yeah,
That's the
gotcha.
cycle we're in. So I try and get them to start savings again.
Yeah.
While they're paying debt, I try and squeeze an extra $20 if we can. $20 a week starts adding up.
Yeah.
And
Bit of a war chest too in case something goes wrong.
it is.
Yeah.
And I find people's mindsets shift then. They go, oh, my God, I've got money in the bank. And they look at it and we keep it separate away so
Yeah.
it's harder to touch.
Yeah.
And I say,
protect it now.
yeah, and I say it's an emergency fund. You're smashing your debts. Great work. You got a little savings. You've got $500 savings now.
Yeah.
Let's just keep growing it. Adding another $20, keep
Yeah.
adding up. Before they know it, they've got 1,000.
Yeah.
So we're getting closer
It
to what we
becomes
need.
exciting, you know,
It does,
yeah,
and it's a
yeah.
game. And
Yeah.
and then what I do is I make sure they go and get a game around the house, going, what can we get rid of? Like, what things we can sell on Gumtree or on Marketplace, so they can start building that up.
And if you're really courageous, what you could do is sell your partner's stuff without them knowing and see how that goes down, right?
You might need
Surprise, guess
relationship.
what's missing. Yeah.
You might need relationship counselling
Yeah.
after that, and there's some extra spends.
Yeah.
But
you know, a good divorce lawyer, yeah. But that's the thing, though. But it's great, and there's things that
Yeah.
in everyone's house. There's stuff sitting there that you got for your wedding 20 years ago that you've never used. It's brand new, and you go, we might use that one day, or I feel embarrassed if they came over and asked about it, or whatever. There's stuff that's just sitting there that you can actually get rid of.
I
Or
sell
at least
stuff
declutter.
all the time.
Yeah, absolutely.
I mean, that extra cash is great. I mean, I give it to our daughter for pocket money when she was little,
Yeah.
and now we use it for different things.
Yeah.
But I mean, cash for cans, we do that, and we have parents and family around. And they always give us their cash
Yeah.
for the cans. So we go do fish and chips every
Yeah,
couple of months. And that's kind of like the celebration as well of people.
Well, on the note, I also think with buy nothing that a lot of people go, always put on buy nothing as well. You probably might be able to get something for that. Just spend a bit of time. You might be able to sell it for $50 or something.
Yeah.
It adds up. When people say, I just want to get rid of it, because, well, just take a little bit longer and maybe you might be able to.
Won't take long.
Yeah, that's what I'm saying. I think those things sort of help out.
So that's where I'd do first is
Yeah.
once your bad debt's gone, you put a little bit more in your mortgage because you want to start smashing that down.
Yeah.
You get your savings plan in place.
Yeah.
And then once you start getting your savings, my next thing is start looking at future, right?
Yeah.
What's your investment strategy? Are you just a person who wants to put into super, or do you like to take a bit more of a risk?
Yeah.
I always think you need some in super as well.
Yeah.
Because I like hedging your bets, right?
Yeah, absolutely.
And then playing with some things. When you're completely out of debt, then
Yeah.
you can play with the high risk investments. But if you like buying shares because you know you can touch them and sell them, that's fine. build your wealth up.
Yeah, that's great. Yeah,
That's important.
Diversify.
Absolutely.
But what about, because I think if you got to that point and you had a card that had all your savings access to it, and that's what your everyday spending is, I think that could be dangerous. Do you think it's best to separate?
Definitely.
So then have give yourself an expense card for.
So I have separate. Yeah. So I encourage them to have separate accounts, right?
Yeah.
So for a self-employed in particular, they have a separate BAS and tax account.
Yeah.
And then we have an emergency fund set up separately. They're all separate accounts, and they're away from their main banking.
Yeah.
Okay?
Gotcha. Yeah.
And then what else do we have? And then if they want to save up for something, then they put that into they call it a pool account or a barbecue account or outdoor setting, whatever it is, or renovation account. Then they start putting money into that, right?
Yeah, that's amazing. And I think that way, and then again, you can celebrate the wins and see the successes.
And it's all separated, right? Because you can see exactly where your money's going. And it's not only because this is the danger, which is what you were mentioning, when it's all lump summed in one area, it's not segregated and you overspend. Yeah. Because you think you got it, but you don't.
Absolutely. And then if your partner doesn't see what you're spending the money on and they're doing the same thing, bang, your account goes to zero and you go, wait a second. Look, we've talked about a lot with finance and I could talk to you all day and we'll definitely get you on for more in the future. But I'm going to ask you a question that we ask everybody, and that is the $10,000 question, and that is you're building or renovating a home, you are about to pull the trigger on it, and then all of a sudden you get this letter saying that a distant relative is going to give you $10,000. You have to spend it on your home. What would you spend it on?
Beauty. Well, 10 grand doesn't buy you much these days, but for what I want anyway, a new outdoor kitchen. Now, as you know,
awesome.
Minimum 50 to 30,000. I mean, look, it's endless. You can go to 50,000 with the outdoor kitchen these days with put the dishwasher in, the sink, the Barbie. I mean, so 10 grand would be the start of adding to the savings to finish the outdoor kitchen off. Yeah. Not just the pizza oven, it's actually setting it up so that the hub beast enjoys what he's doing and has his pitmaster area.
In Australia, and especially in Perth, I mean, that's outdoor living is, I reckon...
It's king.
Probably, after the kitchen is probably one of the second or third most important rooms. And I think it's just beautiful. And to have that area out there entertaining, enjoying, obviously...
We do a lot of entertaining.
Yeah, and that's it. And then you've got this beautiful space that you can go to and you're not running in and out all the time and crippled by it. So, no, I reckon that's a great example. A $10,000 outdoor kitchen's, it doesn't get you very far, but it certainly puts a dent in it. And
don't worry, when we come to the renovation side of what I'm going to do, we'll be contacting you for advice, that's for sure.
Yeah, happy to help out when you're there, as long as you save up for dump check. Karen, that was awesome. You have a wealth of knowledge. Just to recap, I just think anybody... Again, anyone who is a slave to the mortgage, it is horrible when debt is crippling. You hate your life. It's too much. And there is help out there if you do need it. And I think I'm all for having a great home and a great lifestyle, but just make sure you can afford it. And I think talking to somebody about helping you manage that or understand, that's the first thing, understanding where you're at and what you need to do to where you need to be. And then that discipline is that if you be truly honest with yourself, if you're not disciplined, you don't have a track record of it, get a coach to help you out. I mean, the reason why personal trainers at the gym are so popular in that and why they're there is if people were disciplined, they would do it all the time. But to have someone with your finances, it's the most important thing you can possibly do. And you just enjoy your life when you know you've got to, even if you're in debt and you have a plan, you'll feel better immediately, and it's definitely worth doing that. So Financial Management 101, you've got a podcast as well. Do you want to tell us a bit about the podcast?
Yeah, Managing Money Made Easy. It's a financial education podcast. So I bring guests on to talk about all things about money, whether you're a business owner or an individual. It's about me helping, or basically giving back, because I want people to start to get the tools in the education so they can make smarter decisions with their money. And that's what the podcast is all about.
Brilliant podcast. And I mean,
Thank you.
And you're doing really well, actually. You're getting lots of listeners, which is great,
Yeah, and I'm getting a few more reviews now because I hadn't really gone out there and marketed. I was just sort of building. And then with one of my businesses, I didn't get a chance to, for 4 years, go and do podcasts. And now I've gone, right, now's the time, step up. People want to know what's going on.
Absolutely.
And they want to actually, sometimes people just want to know the information without feeling like they're embarrassed by saying, how do I do this? Well, they can tune in. And I've got so many great guests that are coming on board for the rest of this year, and I can't wait.
Well, that's what you need. Like, it's like, you're right, there's a lot of shame in debt and all that, and what I want to do. And reach out. Like, you're not going to shame them. But
No way.
if you can tune in and listen to somebody about, okay, what do I do? Oh, actually, that's great. And then eventually go, well, you know what, let's just reach out to you because it's best. But I think it's a great podcast. I think it's something that's, I've listened to quite a few episodes. I think it's just a great way of helping people out there get where they want to be. Speaking of reviews, if you are listening to this podcast, please leave a review, leave a comment or anything to give us feedback as to we're on the right track. It's the information that people are after. I think you've been amazing. We want to get you back for more. But at the end of the day, we really want those reviews because that's our best feedback to find out where we're at. It also helps spread the channel as well.
Absolutely.
Thank you very much, Karen, for coming on.
Thank you so much. It's been a pleasure.
My pleasure.